now my pleasure to introduce you to Azincourt's President and CEO, Alex Clemens. Alex?
Thank you, Jack. Appreciate everybody being here. I should emphasize today we're really not going to get into a massive overview. I think what we wanted to do by holding this webinar was to get people updated on where we're at in terms of, in particular, our East Preston project, where we plan to go in the coming months. And I thought best time to do it now when the uranium sector is going through some serious downs, and I get a lot of calls and communication from shareholders wondering, what's happening. So I thought it was a good time to get Ted O'Connor, our director and basically our lead technical advisor on the project, online, and to go over where we're at. So bear with me. I'm going to kind of fly through some of the slides here and get to the meat of the bone here, which is the Preston stuff. On our corporate update, or our corporate presentation here, obviously we have our disclaimer, which Jack went through in a little bit there. But for those of you who may not know Azincourt, we're an exploration and development company. We're really an explorationist by definition. We're in the drill phase, which is a nice thing to get into. But we're involved with alternative energy, primarily uranium. We've experimented a bit with lithium, and we look at other alternative energy products as our niche in the market. The management team is essentially the three of us that you see on this slide. I'm the president, CEO, and one of the directors. My background is corporate finance, business development, marketing, and media. And I'm involved with other companies. I've been involved with primarily finance for the last decade. I'm a good corporate guy, but really the science behind the deal is Ted and our other director, Paul Reynolds, both professional geologists, geoscientists, with decades of work, and Ted in particular in the Athabasca with companies like Cameco. So, we keep it lean, and we have, I think, the requisite knowledge on the corporate side. The industry overview here, full marks to Saskatchewan, which I basically plagiarized their website here, but it was so succinct that I decided to use it. We believe, like a lot of others, that the uranium market is about to turn dramatically. All of the supply-demand fundamentals are staring us in the face. Sometimes it's hard to see that when it's as depressed as it is right now. If we look back at the end of 2018, for example, the spot price was up near $30. I think it was 28, 29, and there was certainly a buzz. The 232 initiative that went on in the U.S. And is still somewhat ongoing has sort of thrown a wet blanket over the sector, but that will resolve, and it really will become. There's a lot of things that will trigger from that resolution. So we're poised for that, and I think if you look at some of the bullet points on this slide, again, full marks to Saskatchewan, they put it together so nicely, but there really is an amazing opportunity staring us in the face. Sometimes that there's some pain involved with that, which we're all going through at the moment. If you look at some of the share prices of some of the producers and some of the more well-known uranium companies, everyone's on a low, everyone's on a down. But if you look at the supply-demand fundamentals behind the sector, you have to come to the conclusion that just can't sustain the low. So we're poised, we're ready to go, and I think that's going to benefit us in the long term. We have two projects under our belt at the moment. The main one is the East Preston project in Saskatchewan. We have great JV partners in this deal with Sky Harbor Resources and Clean Commodities Corp. The East Preston project is the eastern side of the larger Preston project. We have 25,000 hectares. There's been a lot of work done on Preston and a lot now done on the eastern side, which we'll get into momentarily. We also have a grassroots project located in Puno, Peru, which is a phenomenal district with amazing deposits and different types of base metals and uranium and lithium and other things in the area. We grabbed that. It came to our attention, and we like it. We did some work there last year, and the sample program was quite successful. But that's a secondary project for us. The main thing, the main focus for us is obviously East Preston. If you're unfamiliar with the Athabasca Basin, it's located on this map. You'll see the province of Saskatchewan in Canada. The upper left-hand side there, the northwest side. You can see the size of the basin itself is quite large, but the largest, highest grade uranium deposits in the world are located there. So we're in the right place, obviously geopolitically stable, with decades of production history and great infrastructure and some very large deposits in the area. So if you're looking for a place to do what we're doing in terms of uranium exploration, I don't think you can find a better place to be. One of the important things to understand in terms of where we are in the Western Athabasca is the neighborhood, the quality of the neighborhood. You can see who is working right now where we are. There's some big companies and some smaller companies, but it's nice to know we're in the neighborhood. There's a lot of market cap in the western side, and you can see NextGen and Cameco and Fission 3.0 and Fission, some other large companies in the area, and in particular Orano, which is basically Areva, very large company. They're currently working the western side of Preston, and so we're in the right place. We like where we're at, and upon discovery and successful development, it opens up some doors for us just being in this neighborhood. The next slide just drills down a little bit on the property itself, and there's some interesting bullet points there for you to go through. I think the main thing is there's been $2.5 million worth of exploration expenditures done on East Preston over the past few years. Ted will get into a little bit of that momentarily, but we have done everything we need to do to get to the drill phase, which we really just begun. So that's where we think the story picks up and changes the dynamic of where we were, say, a year ago to where we are today. And I'll let Ted take over in a moment, but really we're going to talk about the work that has been done that leads us to the prospectivity component of this, why we think, and others believe that we're onto something here. We could be onto something. So at this moment, I will turn it over to Ted O'Connor, our director and our lead technical advisor on the East Preston project, to walk you through the next couple of slides. Ted, just let me know when you want to change slides. We're on slide 10 now. Thank you.
Perfect. Thanks, Alex. Yes, so in late 2017, we reinterpreted an earlier airborne helicopter EM and magnetic survey from first data principles, and came up with numerous areas. One of them lit up, we'll see in the next slide, but we decided to do ground follow-up with horizontal loop electromagnetic survey and gravity surveys. And you see the statistics on each of those surveys. And the idea is to better locate these basement conductive trends, which are the first order criteria for these unconformity uranium deposits, especially the basement hosted ones. And secondary to that is looking at the gravity results, where we look for gravity lows along the conductor trends, to pinpoint alteration and structural disruption where the rocks have been changed, ideally by mineralizing fluids. And as the second last bullet says, the gravity highs actually tell us a little bit about the basement topography and geology, so that we can look for these structural traps. So we did this ground survey in 2018 and started preparing to drill test some of them. Next slide. And here's just a map of what we did on the ground with a bunch of, I guess, priority areas along these conductor systems. And at the time, we probably had about 30 line kilometers strike length of conductor systems to test. It's clear from the patterns of the electromagnetic and magnetic surveys, as well as the gravity anomalies that we identified, that this is no simple system, and that's a good thing when you're looking for unconforming uranium deposits. So we started prioritizing them, and we came up with a list. We had started planning the drill program that took place early in 2019, in March, as a matter of fact. We kind of got a bit of a late start as far as the permitting goes, and we had about $600,000 to $700,000 earmarked for this drill program. Next slide, please, Alex. So in preparation, while we were permitting the drill program, we decided that the rest of the project, so only the northern half of the project had this quite detailed VTEM, or versatile time domain electromagnetic system, flown over it. And because we liked what we saw on the northern half that was covered already, and the reinterpretation we did in 2017, 2018, we decided to cover the entire project area, and basically extended this A conductor trend about 10 kilometers to the south, right to the edge and just off property in the southwest, where you see the bottommost A conductor. We also lit up something that's going a bit transverse and more in a north-south in the center of the project, which previously was right at the edge of the previous survey and basically appeared as noise. So we've added considerable targets on the southern half of the project. Yes, right there, and on the main A conductor system. But as you can see, with the exception of the C1 way out to the east, there's not a lot in between. So it's, once again, that's good to know, and we see the same patterns, structurally complex conductor trends that we need to follow up. Next slide, please, Alex. So, as I mentioned, we got a late start permitting and getting logistics all together. We had planned about $600,000 to $700,000 just for the drill program itself, and as luck would have it, we were making the road at -40, and within a week and a half of getting the road finished, the weather turned, and we had to scramble to change from a land-based drill program where we were expecting to get something on the order of 1,500 meters of drilling done, to one where we only ended up doing 552 meters. And this was basically close to the camp, and taking some good targets, but not necessarily the best ones, because they were closer to the camp. We had to change to a helicopter drill program, which basically cut our meterage and time, by 2/3. However,
Ted,
yes.
Hey Ted, it's Alex. I just want to interject something there. Out of that sort of change of plans, I think we can identify some silver lining, and really, so we've now committed. We'll speak to this momentarily, to a much larger drill program in the coming months, in the winter of 2019-20. And even if we had gotten 1,500 meters done early on, the market obviously is not in the greatest mood or in the greatest situation for receiving good news. So I think the silver lining here is that delay may benefit us because we're going to get a lot more holes done in what we think is going to be a much better market, and maybe so that delay or that cut in the meterage that we expected will actually turn out to be a benefit in the long run. So I just wanted to throw that in there for you, Ted. Go ahead.
Yeah, perfect. So what we did learn from these 3 holes, to give a bit of context, I was with Cameco and I drilled the first holes on what is now the Pure Point Hook Lake joint venture. We had no partners at the time, but over time we brought in Cameco brought in Orano, and now subsequent to that, Pure Point's running that on their discovery, as well as being involved with Patterson Lake South and Patterson Lake North with Fission and Fission 3. I can tell you that the rocks are identical as far as lithologies and the trace element chemistry that we're finding in our first initial holes. They all point to smoke when it comes to basement-hosted unconformity uranium deposits. I guess the downside of not having a thick sandstone cover, if there is one, is that the alteration signature around sandstone covered deposits is generally broader, but and basement hosted are more constrained to immediately around the basement rock, the graphitic basement rocks that we found. So vectoring is a little bit more difficult, but we have all the ingredients and including the Pathfinder elements. Where we're going to be focusing our priority targets for the upcoming drill program is on areas that appear more complex and structurally disrupted, because you need these long-lived old basement structures that get reactivated after the sandstone was there. And because we're located right immediately south of the present-day edge of the Athabasca Basin, sort of exactly like NextGen and Fission on their deposits, we know that the Athabasca sandstone was far larger than it is now, and was indeed covering this at the time of mineralization 1.5 billion years ago. So we're in the right neighborhood. We have the right rocks. We just have to zero in on structures along these conductive corridors. Next slide, please. So I won't get into each of the 3 drill holes and what we actually found, except to say that we have the right lithologies, these graphitic basement rocks that, for the most part, except for one hole had some good, structural overprint, so more recent structural disruption that you'd expect to see in the neighborhood of a uranium deposit in this area. We've got the right lithologies, and we just have to find where they're more structurally complex. And if I can probably go to the next slide, maybe, I think, Alex.
This one?
Yeah, that's fine. I'll just close my technical side of things with saying that we have these long linear trends, and you can see them in some of the previous slides, and where they bend and flex, we'd expect to see more enhanced structure. So those are obviously going to be the there's some nice bends, and I liken this to any of the discoveries, the big discoveries, the small ones. They don't happen overnight. I mean, there's 2 end members. Cigar Lake, that deposit was found on hole 14, and that's incredible. McArthur River, the Cameco's mine that's in hiatus right now, that was found on hole 210. So some of these things take time. We're hoping to work smarter than McArthur River. but
Yeah.
we know a lot more than when MacArthur was found back in 1988. So we're zeroing in and vectoring more quickly. So that's a good thing. Anyway, you can go back to what we're planning for the drill program, and
Great.
I'll jump in where I need to.
Okay, awesome. Thanks, Ted. That was technical enough, I hope, for those of you listening. Certainly, we feel very strongly that we're onto something here. There are some other people who've confirmed that, who are very knowledgeable in this industry, and it's just a matter of time, I think. As Ted pointed out, some of these discoveries do take time. Unfortunately, we live in a marketplace now where patience is no longer the order of the day. That's been trending this way for years. So we battle that on a daily basis, but those of us in the know and those of us sitting behind the scenes, you know, it would be nice if things happen faster, but certainly I always speak to the baseball analogy. This is the first inning of a 9-inning game. We're literally at the beginning of the process here. But more importantly, we are cashed up. Azincourt has about $1.8 million in the bank. We've set aside 1.2 Canadian for the upcoming drill program. We're hoping to get around 2,500 meters drilled this winter. We're ahead of the permitting process in terms of getting it underway and determining targets. So that's, you know, we'll be ready to go at the optimal time this year, which means we'll get a lot of holes done in the coldest part of the year. And I think it's important to understand that we've essentially guaranteed the spend requirement for year 3 of our joint venture with Sky Harbor and Clean Commodities. We'll, once we get there, have earned 70%. We'll be the majority holder of the project, and I think that bodes well for us. I mean, 25,000 hectares in where we are located is just simply not available anymore, and you're certainly not going to get it with the type of work that's been done so far and the type of indicators that have been proven. So we're happy about that, and we think, again, I think it's important for people to understand why the market's getting hammered and beaten, and people are, you know, having great anxiety about it, to know that, you know, we have a plan, we're funded to execute on that plan, and you know, I mean, exploration is difficult, discovery is never a guarantee. But certainly we have all of the things that you need to point you in that direction, and I think we're headed there. You know, at some point down the line, and it's going to be a ways before we get there, we'll know exactly what we have at East Preston. And I'll just go very quickly through the Escalera Group in Peru. There's a small 7,000 hectare package of properties located on the Picotani Plateau. There's a lot of large companies in the area, Plateau Energy Metals, Fission 3.0, some other ones, Rio Tinto, Minster. These are very large companies. There's a lot of base metals and other things going on in that plateau. We did some exploration in 2018. We came up with some really nice rocks, 8,000 ppm uranium, which is almost 1%, U3O8. We've determined some large trends on the Escalera property. And I think in a really, really good market, which I think is at some point going to dawn on all of us, we'll go back there and we'll get some more work done. I think it's important to also look at who's around us. This slide gives us, on the Athabasca portion of our portfolio, who's near us and what we're doing. We'd like to move into the middle somewhere there. I mean, if you look at who's in the area and where they are and what they've proven, we're the new guys, or we're the little guys, and our market cap reflects that. But with a company like us, upon successful discovery and upon the sort of reignition of the uranium sector, that market cap can grow and most likely will grow, and it certainly grows upon successful discovery. So this slide, this presentation is available on our website for anybody who wants to go through it in a more detailed way. It's there for you. It's too hard for me to go over every little piece of it while we go through something like this. But we've done comparables through our friends at RB Milestone. Obviously, they've helped. And I think it's important to understand the neighborhood, who's in the neighborhood, and where we are on the developmental path. We have 144 million shares out. Sometimes that scares people. They think it's dilutive, and it might be to a certain degree, but in a bull market, upon discovery, it's not going to affect us in a negative way. Most of our larger shareholders are long-term shareholders. They have warrants that sort of keep them in the loop here for the next 5 years. We like that. They're going to allow us to grow and to really drill test this large property. We have 66 million warrants out between 7 and 10 cents. Again, upon success on the ground, we could easily see several $1 million come into the company from those warrants. Some will never be exercised. Some will. Some expire. Some have, as I mentioned, a 5-year life. But they're mostly held by some large institutional holders. The last bit on this slide talks about insiders and close associates, family and friends. I mean, we've got about 25% of the stock, so that's a good sign. We're all long-term. We're not going anywhere, and we're going to develop East Preston. You can follow us on Twitter. We're pretty active there. We have a Facebook page for those of you who still are active on Facebook, and I welcome communication. I'm an easily approachable CEO. I respond to every shareholder as quickly as I can. In fact, many have my cell phone number. I don't have an IR layer or anything like that between me and them. So I welcome people to reach out anytime and air their concerns, or it's nice to hear something positive every now and then. So I'm around, but I appreciate everybody being here today. And hopefully we're going to see the market turn and have a very successful next 6 to 12 months for Azincourt. Thank you.
Thank you, Alex. If you're interested in asking a question and are logged into the web platform, you can submit your question to us directly in the chat module in the bottom right-hand corner of your screen, or by raising your hand by clicking the hand icon. I'll then announce the individual who would like to ask a question, and you'll be free to speak. We'll now take a moment to develop the queue. Thanks. Our first question from a private investor: how large does a deposit in the Athabasca Basin need to be in order to be a real contender for production?
Ted, that's a perfect question for you.
Yeah, it depends, because it's a complex interplay between how good the deposit is, grade versus tonnage. We are in basement rocks, much like Next Gen, away from the influence of lakes. Although we are using them for access, we're not dependent on that. But I'd say that if you look at something between 50 to 100 million pounds could easily enter into the queue, depending on grade, etc. I believe some of the more advanced projects like Next Gen and like Fission's Patterson Lake South deposit, they will be able to justify a mill on the west side of the basin. To go back in history, Clough Lake, which used to be owned and operated by the predecessor to Orano, it closed down, but it only ever produced about 80 million pounds from a series of small deposits. The mill has been decommissioned, and the whole place it's just north of the Shea Creek deposits, but it was a lot smaller. I think once the gravity shifts and people start constructing a mill on the west side, then even smaller, shallow 25 million pound deposits become toll millable or extra feed, if you will. So I hope that answers the question. Right now, I think on the east side, what Rio Tinto purchased in Rough Rider is somewhere around that 50 million pound mark. they do not have a mill, nor do they have access to a mill, so they're in kind of stagnated mode, I guess, not really doing any significant development or drilling. It just didn't get as big as Rio Tinto thought to justify their own production center. I just hope that puts it into context.
Thanks, Ted. Our next question, what is your view on Petition 232 legislation and its impact on Azincourt and your direct peers?
Yeah, I'll take a stab at that, and Ted, I'd certainly like to get your take on it as well. 232 has certainly put like I mentioned, a wet blanket over everything, and that's simply because U.S. utilities cannot enter long-term contracts until they figure out where they're buying their product from. And that indecision or question mark or lack of clarity has really hurt the industry overall. But if you look at supply demand dynamics here, that can't go on forever. The number of contracts that have expired, are expiring, or will expire literally dictate that these utilities have to get back in the market. They've got to secure long-term supply. And when you look at $25 spot, people say, well, there's lots of reserves out there. Yeah, but a lot of those reserves are not economically viable until we hit $40 spot or greater. So there's going to be that gap that has to be made up. And I can tell you right now, if we had $40 spot today, the market would be in a completely different mood. 100%. I mean, I remember 2007, and I certainly remember 2011, which is not that long ago. Those were boom times in the market, and spot was, made these dramatic ascensions. Spot price did, and then you see amazing evaluations and M&A activity and fortunes made overnight in uranium stocks. So I think where 232 has sort of hurt things. I mean, we're going through an additional period now where the administration is forming a committee to look at the impact, the national security impact of uranium. But they realize, they're not going to be buying the uranium from Kazakhstan. They're buying it from Canada. So it's just how that works. U.S. domestic suppliers aren't in a position yet to supply 25% to U.S. Utilities, so they're going to come back to the Athabasca. They're going to come back, and that's into other friendlies, as it were, and it'll happen over time. So we're just waiting for it to turn, but I think there's going to be a violent spike when there's a critical mass of these forward contracts, these long-term contracts having to be signed and executed. That we're going to see things change. But Ted, if you have anything else to add to that, please do.
Yeah, I think to reiterate a couple of points, the long-term contracting has not been happening, and that's been apparent and there's been available material on the spot market. So that's hurt us for the last X number of years, basically since Fukushima played out the way it did. And 232 has basically shut down any of the U.S. utilities from contracting with anyone because they were unsure whether the price they were going to pay was going to be then subject to tariffs. That may or may not happen depending on this extra deliberation time they're going through. But they also have some sourcing issues if they're mandated to take uranium from certain places and less rely on others. The people who forecast uranium, whether it's UXC or Trade Tech, they would tell you that there's probably no way we'll go back to a two-tiered price system. There used to be different prices for Russian material versus Western world material. So they were talking out loud at the last nuclear conference about perhaps a U.S. price versus an international price, but they didn't think it was going to get there. Primarily because there's absolutely no chance that the U.S. can be 25% self-sufficient based on any reasonable price forecast. To get above about 5 million pounds of production a year, you need $80 plus to get some of these historical districts back going again. So it has put a real cloud or wet blanket, as Alex said, over things. We're hoping to start seeing some contracting long term. The issue is that the producers aren't wanting to enter into any contracts at these prices either, because they're not, whether it's Cameco, whomever, they're the last earnings call. I mean, there was one just today that I missed in preparation for this, but the last earnings call, Cameco said, hey, we're doing some transactions, but they're totally off market and they're not reporting the prices. And so as we see the uncovered requirements of global utilities, so European, North American, and Asian, the price has to go up. So they're not reporting these contracts because they don't want to affect the price, because there's no way Cameco would be selling uranium at even $35 long term. So that's my 2 cents.
Thanks, Ted and Alex. I'll take one more question. You mentioned your cash on hand, but what would be the approximate capital requirements for your upcoming drill program?
Oh, well, we've set aside 1.2 million. I think it's just a shade under 1.2. That's locked. That is our drill budget for the next round, and we expect to get. We'd like to get 2,500 meters, which is a 500% increase on what we just did. So 5 times as many holes. So we could be 15 to 18 holes this winter, and I think that's a significant drill program. And the great thing about it is we still, even after that, would theoretically have a lot of targets still to test. So we're in a good position. That's why I like that first inning of a 9-inning game. We have a ways to go, but certainly in the next round at just under 1.2 million, or roughly 1.2 million, is a significant drill program, and comparatively speaking to some of our neighbors, a very large commitment for our market cap to develop our project.
Great. Thanks, Alex. And thanks, Ted. And thank you, everyone, for joining today's webinar. Today's webinar recording will soon be made available on Azincourt's website at azincourtenergy.com. If you have any additional questions that have not been addressed on this webinar, please feel free to email AAZ directly at info@azincourtenergy.com. Thanks again. You're now free to disconnect.